Good morning, and let's talk about pizzas for breakfast this morning. We do have a note from Morgan Stanley coming in for Jubilant Foodworks. Now, they are reiterating their overweight stance on Jubilant Foodworks with upping their target price actually. So previously the target price was 3,236 rupees and now it's 5,000 rupees. They have seen a considerable upside in their target price. Now, what are they so positive about Jubilant Foodworks? What is keeping them so positive on the company? Now, let's go across through the key highlights for that. So, starting with that, firstly, the company said that Jubilant Foodworks, Morgan Stanley, said that Jubilant Foodworks is the mid to long term strategy for the company is quite strong. They are building the physical as well as the digital business. Also, they are just not pizzas anymore. They're scaling up the non-pizza categories as well, and that is what is making Jubilant Foodworks their top pick. Also, let's not forget about the consumer discretionary spends, how the consumers have actually the sentiment has changed. The industry has shifted more towards organized players, and obviously Morgan Stanley also believes that the consumer discretionary industry is decisively a strong beneficiary of the pandemic, with the resultant shift from unorganized to organized players. And that is obviously going to benefit Jubilant Foodworks as well, because unorganized players doing quite well, and Domino's is a very known brand as well. Other than that, they believe that Jubilant Foodworks is actually in an opportune position, good position to capitalize on the building blocks of the rising preference of this shift also, which we're seeing coming towards organized players as well in the QSR space. And other than that, the company's combined initiatives, efforts that we're seeing coming in from the company to improve and increase the digital capabilities, increasing the physical footprint, along with moving into adjacencies, not just pizzas. Now we've seen them foray into, they had Hong's Kitchen, then during the pandemic period we did see the foray coming in into Ekdam Biryani, and now Popeyes as well. So surely on the other business pickup also, the street will start valuing these newer businesses also, and that is what Morgan Stanley is also looking at, that the new adjacency business, the other businesses other than pizzas, are also doing quite well for Jubilant Foodworks. And that it's in a matter of time when people will actually start valuing these other businesses as well. Now, other than that, they believe that the market will as of now, Jubilant's valuation is higher than its peers when you look at it in the QSR space, but they believe that the market will be willing to pay for Jubilant Foodworks' strong market share gains, the technology platform, revenue growth strategy, and the expanding of TAM as well is what they believe that the stock market, the markets will look at as well, and the investors will be willing to pay for this premium valuation of Jubilant Foodworks. As of now, they are surely maintaining their overweight rating, and with a target price of 5,000 rupees per share.